Michael Saylor's strategy just went underwater on their entire Bitcoin stack. $47 billion in unrealized profits gone. Forward Industries is sitting on $1 billion loss after buying Solana at $232. And we just got our first casualty. Solmate has scrapped its $2 billion merger, citing sharply changed market conditions. I'm going to be honest, I was cheering alongside everyone else when DATs were buying billions of dollars of Solana over 200. It was working for Bitcoin, working for Ethereum. Why wouldn't it work for Solana? The thesis made sense. But with Sol down 57% from all-time highs and some of these companies down 98%, I don't know where they go from here. Let's break down the damage. Strategy holds 713,000 Bitcoin at an average cost of 76,000 per coin. With Bitcoin trading near 67,000, they are now staring at a 6.5 billion unrealized loss. MSTR stock is down 66% over the past year, nearly 80% from its post-election high. A bullish analyst just slashed its price target by 60%, from 474 to 185. The largest Solana Treasury company, Forward Industries, holds about 7 million SOL, purchased at an average price of $232. With SOL at $85, their stack is worth about $600 million, $1 billion paper loss. The stock went from $40 to just above $5. Solmate is the first casualty that we just brought up, so they just walked away from their Rockaway X merger, a deal that would have created a $2 billion institutional giant. CEO Marco Santori said that market conditions have changed dramatically since we negotiated the deal. They're sitting on over 1.2 million SOL. Their stock collapsed from $52.95 down to $1.16, down 98%. Now we also have to talk about the rest of them. DeFi DevCorp down 42%, Solana Company down 65%. The entire sector's bleeding. Let's be fair here. The thesis wasn't that crazy. For Saylor, the logic was simple. Bitcoin is the only asset with absolute scarcity. Hold it forever. Use corporate treasury as a vehicle. His 712,000 Bitcoin are completely unencumbered. No collateral, no forced liquidation triggers. For Solana DATs, the pitch was even more compelling. Multicoin led a $1.65 billion pipe into Forward Industries with Jump Crypto and Galaxy Digital. The argument, Solana has native yields of 6 to 7% through staking. Better economics than Bitcoin sitting cold in a vault. Kyle Samani called Solana always the answer for crypto treasuries. And honestly, at the time, it made sense. You're getting yield on a high conviction asset instead of just holding it. The problem is that they all time their massive buys near the top. Sol hit 293 in January 2025, Forward bought at 232, now we're at 85. That's not a dip, that's a 70% drawdown from peak. Here's the nightmare scenario everyone's thinking about. What if these companies start selling? Forward Industries alone controls about 7 million SOL. That's real supply overhang. If shareholders revolt, if boards panic, if these companies face any kind of liquidity crunch, that SOL has to go somewhere. Same with Saylor. Strategy has $8.2 billion in convertible debt. Now, they say that none of that Bitcoin is pledged as collateral, but when your stock trades at a discount to your Bitcoin holdings, issuing new shares to buy more becomes a losing game. The Solmate situation shows how fast sentiment can flip. 2 months ago, they were announcing a $2 billion merger. Now they're talking about capital efficiency and avoiding dilution. Corporate speak for we are in survival mode. And here's the part that keeps me up at night. So FundStrat's internal docs leaked, showing that they warned clients about Bitcoin dipping to $60,000, while Tom Lee was on TV calling for $200,000 Bitcoin. If that's the base case, we could see more forced selling. But here's where it gets interesting. So Kyle Samani, he just left Multicoin Capital after nearly a decade. And what did he do? He doubled down on Forward Industries. Instead of cashing out, he's requesting his Multicoin redemption in Forward shares and warrants, not cash. It's a bold strategy, and I like it. He says he's mega long Solana despite the crash. The timeline seems pretty negative about this, but there probably hasn't been a bigger supporter of Solana, and it's pretty well known that he helped out a ton with a lot of teams throughout the lows of the bear market. And Forward CIO Ryan Nabby says that they're positioned to consolidate the beaten down sector because they carry zero corporate debt. No leverage, no debt, and a long-term view on Solana as strategic infrastructure. While everyone else is retrenching, they can play offense. Saylor's response, he's still buying. He refuses to sell, not a single sat. The argument is simple. If you believed in the asset at $250, you should believe in it more at $85. These are the same networks, the same fundamentals, just cheaper. Look, were DATs a bad idea? The model isn't broken, the timing was. These companies concentrated their buys at cycle highs because that's when capital was available and sentiment was euphoric. The question isn't whether they can survive. Strategy has no forced liquidation triggers. Forward has no debt. The question is whether they can keep accumulating when their stocks are beaten down. Solmate walking away from that merger tells you everything. The growth at all costs playbook is over. Now it's about survival. But here's the thing. If Solana goes back to $200, Forward's position is worth $1.4 billion. Their stock with 10x. The embedded optionality is still there. It's just painful to hold through the drawdown. Kyle is doubling down. Saylor is still buying. The question is, are you?